we're getting ready to start submitting applications for the Payroll Protection Program. And I wanted to shoot a quick video just to let you know what we're looking at with this thing. So the application for the Payroll Protection Program is deceptively simple. Actually, it only asks you what your average payroll costs are. And the problem is that calculation comes directly from the law and from the rules that have been issued since then. So it's not just a matter of pulling a number off of your tax returns. The other problem is some banks are looking at the 12 months immediately prior to your application, and other banks are looking at only your 2019 average. So if that's going to create a significant difference for you, we may need to talk to your bank, or we may need to find another bank for you to work with. So when you're calculating your average payroll costs under the Payroll Protection Program, you're able to borrow up to 2.5 times your average payroll cost. The payroll cost is calculated using a number of factors. It's going to include very explicitly in the law any salary, wages, or commissions that you pay to your employees. That's pretty straightforward, right? It's also going to include any cash tips or the equivalent of what your employees have received, payment for vacation time, parental leave, family leave, medical or other sick leave. It's going to include certain types of severance payments that you may have made, and then any required payments that you've made as an employer for group healthcare benefits, including the premiums. Payroll also includes payment of retirement benefits, as well as state and local taxes that are assessed on your employees' compensation. So all of those things are included in the definition of payroll, which you're going to average out over some period of time. Excluded from payroll, though, is any compensation paid to any individual employee over $100,000. So if you as the owner pay yourself over $100,000 through payroll, or if you've got employees who earn over $100,000, the amount you can claim is going to be reduced. Payroll also does not include federal income tax withholding and the employer and employee's share of FICA taxes. There is a time limit on this, so we need to be very careful with the way that we calculate it, but it is likely going to be excluded. You also can't include in payroll payments that are made to employees who reside outside of the United States. And then there's other exemptions for FMLA leave and sick pay payments that you may have made, because those are actually covered in a different section of the law. So they're not included in payroll for these purposes. When the law first came out, we thought that payments to independent contractors were going to be included in the definition of payroll. But on Thursday night, when the SBA issued its new rule, that they clarified it, and those payments are not included. And the argument is independent contractors will go and be able to apply for this loan on their own. So their theoretical employers or prime contractors won't be able to include their definitions in payroll. Again, the application is very easy. Calculating this number is going to be a challenge if you want to do it properly and make sure you're getting the correct amount of money. But more importantly, when it's time to go and apply for forgiveness on these loans, you need to make sure that the money that you borrowed gets spent in the right way. You need to make sure that you only spend it in the categories that you're allowed to spend it in, and in the right quantities, so that when you go back to ask for forgiveness, you make that decision very easy for the bank. And that's where our law firm is going to be available to help with that. So if you need help calculating the amount for your payroll protection loan now, and you want assistance with working towards the forgiveness, reach out to us with any questions that you have, and we'll be happy to help you out.